My name is Paul Wallace. I'm the Africa editor of The Banker magazine, and I'm here with Godwin Emefiele, the head of Zenith Bank, Nigeria's largest lender by Tier 1 capital. Godwin, thank you very much for joining us.
Thank you, Paul, and good afternoon.
Good afternoon. 2012 was a very good year for Nigeria's banks. Three of them, including Zenith, made over $500 million of profits before tax. Some people suggested earlier in the year that 2013 would be harder for them, given the fact that interest rates on government bonds were going down, the so-called AMCON levy, which banks have to pay to the bad bank that was set up during the crisis, had been increased, and also recently the Central Bank of Nigeria increased cash reserve requirements. Has it been a harder year, 2013, or do you think the banks will still make very good profits on the whole this year?
Well, you're very correct that 2012 was a very good year, and given some of the policies that has come from the Bankers Committee, and here I mean the Central Bank of Nigeria, people generally feel that 2013 will be a little bit difficult for the banks. But I think it will still be a good year. It may not be as excellent as it was in 2012, but I think 2013 will be very good as well, given that banks have got to diversify their revenue base, and that's what most of the banks, particularly Zenith, is also doing. So I'm pretty certain that 2013 will also be a good year.
About 2 months ago, the Central Bank of Nigeria shocked many people in the country when it increased the cash reserve requirements the banks have to place with it for public sector deposits from 12% to 50%. Some people were against the move and saying that it was a bit too drastic. What was your take on it? Was it needed to shore up the strength of the Naira, and do you think it was a good policy?
Well, I think the Central Bank took the correct decision to withdraw 50% of the public sector funds from the banking industry, basically because, I mean, as a central bank, it has a primary mandate to achieve price stability and also ensure that exchange rate is stable for it. And the central bank, since Lamido Sanusi came on board, has always said that it will hold strong to exchange rate. And to do that, I mean, the central bank didn't have a choice but to do what it did, because there's a need to ensure that the exchange rate is held firm. And I mean, the central bank was beginning to see that the demand for foreign exchange was getting high, and it was also sort of contributed by maybe speculative demand as a result of the high liquidity in the system, and he thought that the right thing to do was to pull back some of the liquidity in the system, and I think it's the right decision.
The Nigerian banking sector is very, very competitive, especially amongst the top-tier banks such as Zenith. What is Zenith doing to try and differentiate itself from its rivals and win more customers? Well,
basically, I think when we started Zenith Bank in 1990, we basically said we're going to take customer service as very important, and to achieve customer service is what we did was to ensure that we put in place strong technology to back up customer service. That we will continue to do. Zenith Bank, like you know, has low price deposits in its balance sheet, and what we try to do is to see how we can set up branches in some of the metropolitan centers where we can attract cheap deposits, and that we will continue to do to differentiate us from the other banks.
One of the things that is sometimes said about Nigerian banks is that they don't lend to the real economy, small businesses and individuals, and they focus too much on the blue chip companies and buying government bonds and things. Do you think that's a fair criticism? And if so, is it changing? Are banks in Nigeria starting to lend to the real economy?
Yeah, let me say that's not a fair criticism, because you find, for instance, between 2010 and 2013, the Nigerian banks have increased lending to the agricultural sector, which is predominantly dominated by the small and medium enterprises, from about 1% of their banking of their lending portfolio to almost about 4% in 2012. And the banks are doing a lot of work to ensure that we continue to improve on that. The Central Bank of Nigeria also has certain products that it has put in place to encourage the banks to lend money to the small and medium tier enterprises, and we are doing that. Yes, it is also correct that banks are lending to the large and real sectors of the economy, but to say that the banks are not lending to the small and medium enterprise, I think is unfair to the banks.
Next year we'll see quite a big change for Nigeria's financial sector when Governor Lamidi Sanusi steps down, probably in June 2014. People will be watching very closely whoever the president decides to succeed him. Do you think are you concerned at all that the next central bank governor might not have, might change policies, the current CBN policies, or are you pretty certain that that tight monetary policy, for example, and stringent prudential regulation will continue? Let
me say this: as Lamido Sanusi has been an outstanding governor, and indeed he has won several awards, even amongst all central bank governors, particularly in emerging markets. He has done an excellent job reforming the banking industry since he came in 2009, and somehow, unfortunately, we say, well, in 2014, he's most likely going to step down because he had himself said he wasn't going to seek a reappointment for another term. The Nigerian banking industry has, I believe, also some very strong and capable people who should be able to follow up on some of the policies that Lamido Sanusi has put in place. Indeed, he has done a lot of work reforming the banking industry, and I do not think that anybody who's going to come in will begin to reverse some of those policies, because those policies are good for the country.
Godwin, thanks very much for your time today.
Thank you very much.